Hello, everyone. So this is a very ad hoc section. So I'm sure from what you see on my screen is pretty clear what this session is going to be about. Of course, the very, I would say the mainstream topic is Singapore airline worth buying right now, since we have the vaccine travel lane open up with Germany and South Korean, and we have the Singapore airline website getting overloaded with traffic, and they apparently you can't even enter them. So is that alone enough to warrant a buy on SIA? So, and of course, by association, we will be looking at SATS as well. And if you look at these two charts, they do have a very similar chart pattern. So one is going to affect the other. But of course, when we are looking at this chart, right, Nimbus Capital, we heavily utilize technical analysis. So we are going to be looking at this in a technical perspective. So there wouldn't be any fundamental stuff involved. Give me a moment. My game is like making a lot of noise. Let me close my game. Okay. Okay, so let's start off with SIA first. So if you have been on my channel for long enough, if you listen to most of my analysis, right, I am not really a big fan of the STI constituent or the big cap counters. For example, counters such as Singtel, Keppel, SIA, Keppel D series, all these big caps, major components of the STI constituent. I'm not really a big fan of this, mainly because they are very hard to move, and most of them, right, they are in kind of like a downtrend stock also. The ROI on these counters are not really a lot, the return on investment. So looking at from a capital appreciation point of view, right, I don't really like to trade this counter or even hold this counter, but nonetheless, I do have to admit that these counters have very I would say good dividend yield, very fair dividend yield, based on their stability. And if you are looking for a constant stable dividend yield counters to hold on to, right, STI ETF is definitely a good thing lah. But of course, if you are looking at capital appreciation, which what we traders usually want, then I do not really recommend this counter lah. But nonetheless, let's look at SIA. So as pointed out, right, one thing definitely very obvious, it is a downtrend, but over the couple of months since COVID-19, right, we do see a bit of uptrend coming in, like it is in the making, and we do have some very good higher low coming in, and that is something good. That is something good, because we do want to see our our national airlines recovers lah. And what we are also seeing is that on these uptrends, right, we do have very good green buying, green volume, or these very strong green volume coming in. So this is definitely a plus. And another plus is that if you look at this section here, where majority of the volume is concentrated here, this is where majority of the volume is concentrated, especially the high rate volume, right? This is where all the high rate volume are concentrated. So if I were to draw a box across this particular area where all the traffic congestion, I would say volume congestion had taken place, right? What you kind of see is price have actually gone above already. Not only it have gotten above this critical level, right? It has also it came down, and this level was tested as a support, and now it has started to go up. So this is a very good sign. It's a good sign in the sense that we have a very strong established support at this region, 0.35 to 4.5 region. Of course, now that we have a strong established support, right, Does that mean that we should go and YOLO and go and like throw everything what we have inside into SIA? So when you have strong support, right, you do not, we have to be very careful about what we mean, what we are trying to say by having a strong support. So a lot of you might misinterpret to think that a strong support means price is going to shoot up, price is never going to go back below this area, which is true. A strong support means there is a lot of demand coming in. So it is not to say that price can never go back down, but it is very hard for price to go back down. And that's all the support is saying. When we say there's a support here, that's all we are trying to say. We're just trying to say that there's a lot of demand in this area and price will find it a hard time to go back down. But that is not the same as saying SIA can continue to go upward to become $9, $8 like that. We are not saying that. That's totally a different thing. Meaning when we say there is a strong support, it can be also happen in a situation where price can come down and then get stagnant here for like one whole year. And our statement is still true. There is a strong support, meaning price is finding very hard to go there, but the price, this kind of price action is not something that you will want to trade also. It is not something that you will want to buy in also, because yes, we have a support, but price is not moving up. So what's the point of having a support when the price is not moving up? So whenever we say something, whenever there's a support, whenever there is this demand level, right, we have to be very, very sure. Don't move one step further and go and assume that support means price is going to shoot up. It doesn't necessarily mean like that, because when you are looking at a very, very long-term downtrend that we are seeing in SIA, right, you have to be very aware that there are a lot of people who are still holding this counter from God knows how long ago. There are people who are stuck at $7. There are people who are stuck at $8. Maybe there are people who are even stuck at $13 and they are continue to holding this counter through this entire period. And when price start to recover, right, when price start to recover, these folks who have been holding so long, they might feel that, oh, finally price is recovering. I think I better sell fast before price go back down again. So this is a very common, I would say, retailer mentality, and it is because of this, right? It is because of this. In a downtrend, sellers are always ever present. And it's very hard for a downtrend counter to suddenly shift into an uptrend until all the sellers who have been holding their SIA have finally sort of released their holding, and we no longer have very huge supply of SIA in the market, and it can finally move up. But at the current stage right now, right, I don't really think that is what we are seeing. The only thing that we can establish is that we have a support level at what I have described just now. But not only that, right, we do have a very, very strong resistance level at this point here. So this is the current resistance level that we are facing, 5.77. And even at the current stage here, right, even at the today's price action, you can see that there are rejection coming in. The rejection in the price coming in, you can see the candle forming a wick already. That is a good sign that there are still a lot of seller present here. So if the if the magnitude of seller here is more than the buyer that are coming to support, right, then eventually it will kind of like stagnant there a bit until the seller overwhelm the buyer and it will start to come back down. So once again, if it does go by that this particular movement and price start to come back down, right, because there is a support, it will still be able to find a support here, go sideways here, then maybe in a few months time it will attempt to go up again. So that is one of the possibility that can happen. But as a trader, you have to ask yourself, what is the risk of you buying here and then getting stuck in this kind of situation and you get your entire fund stuck inside SIA? So in trading, you must be very aware that fund stuck inside SIA also mean that these are funds that is no longer available for you to trade other counters that are actually moving much better. Like other counter doesn't have very big resistance above, and now you are giving up your opportunity to trade those counter lah. So there is a very huge opportunity cost involved if you are trying to trade SIA right now, and that is only I would say half of it. Another half is that we are kind of in this particular range of the price. So pre-COVID area is this level here. Pre-COVID level is this level here, where you can see there's a lot of much like the support that I mentioned just now, right? There's a lot of traffic congestion here. So even if price managed to go through this resistance that we talk about just now, let me switch back to weekly. So this was the resistance level that we were talking about. Let me just put it up here. Resistance. Okay, so this was the resistance that we were talking about just now. So this is just a minor resistance, Even at a minor resistance, we are already seeing a lot of selling pressure coming in at this moment. So even if price somehow managed to shoot above here, right? When we go into pre-COVID level, this is where the major resistance will come in, where a lot of sellers, they are camping here and they are ready to let go since price have recovered beyond the pre-COVID level. So we also need to kind of understand from the pre-COVID level perspective, SIA itself wasn't doing very well even before COVID-19 come in. But right now, COVID-19 situation is not really improving by a lot. Perhaps for SIA with this vaccine traveling open up, right? The capacity of the SIA aircraft, our airline, the airplanes, or even the ability to do a lot of mass scale traveling, right? It is still very far from what we have during pre-COVID area, pre-COVID time. So for price to move beyond the pre-COVID level, right, we need to see a huge substantial change happening. Without that substantial change, right, price will find very hard to go beyond the pre-COVID level. And that is what we are seeing in the overall STI, the straight time index right now. Also, we have the STI have actually recovered back to pre-COVID level, but it is just facing so much selling pressure that it has been stuck there since the beginning of 2021. From January, we have been stuck in a pre-COVID level until right now. It's just unable to go beyond that pre-COVID price level. So if you look at STI, we have a lot of overperforming counters such as the banks. The banks are actually the one carrying a lot of these underperforming counter on its back, sort of like carrying the entire index. But aside from the banks, right, you do see a lot of other counters such as Keppel. Keppel has been one of the worst performing counters for the year. They are lagging behind, and even SIA, right, I would say that it will be very hard for them to recover beyond COVID-19 level. So with that said, if you manage to enter SIA today, and for some miracle reason, price goes up above this resistance here and go to pre-COVID level, and let's say you are able to get to that high of the pre-COVID level, let's say $7, okay? Let's say you are able to get to that $7. There's a lot of assumption that we are kind of putting here already, and this is like the this is like the best case scenario that you can ever have. The worst case scenario is that it will probably just get resisted at this level here. You'll probably get resisted at this level here, and then start to go back down. So that's the worst case scenario. So when we are talking about the price being able to go to $7, right, it is like the best of the best scenario that you can ever get. So even at the best of the best scenario, what you are actually looking at is about 26% return if price even somehow manage to go there. And risking so much money on a downtrend counter and risking a huge opportunity cost that comes with entering SIA only to get 26.5% return, right? I believe this is not a very, very good, I would say, a trade decision because of other so many good opportunity are out there in the market. For example, if we look at trades such as golden energy was one of the trade that Nimbus Capital actually give out. Let me take a look at it. So golden energy was one of the one of the so-called trade calls, trade ideas that Nimbus Capital actually give out. And the entry price was right here. Let me just bring up. Okay, you can see it right here. So the entry price given was at 315, and we are able to get to TP2 at 470 very, very recently. So if we want to look at this, right, it is a very, I would say a very respectable 51% TP that we have gotten so far. And in fact, golden energy is a very cheap counter at 30 cents. So if you compare to counters such as SIA, right, which is extremely expensive at around $4, it is, I would say, not that accessible to a lot of traders out there. So if you are looking to trade SIA, right, most likely you need to resort to CFD leverage brokerage. Now, if not, you might end up being able to buy only like 1,000 share or what. Or even if you are a big time player who is able to afford as much SIA that you want, right? Then are you really do you really want to buy into this counter where the maximum return that you can possibly get for the next maybe 4 or 5 years is only 24%? I don't really think so, because we have counters such as Propnex that went up for like over 200, close to 250% that you can actually put your money into, and it is not like it take a very, very long period for counters such as Propnex to went up. It only take about 2 years. And we also have counters such as Grand Venture, which let's not take it at the bottom, which is not really realistic. Let's say if we manage to go up at this level at 0.59, right? It is also 144% within a very short time frame. It is less than 6 years. So if we look at Singapore market, there are actually a lot of other better opportunity out there. And in fact, Propnex and Grand Venture are some of the few counters that we actually recommended way back in the past. And even for Propnex, we have trade ideas that was posted as early as April 16, 2021, when it was at $1. So I'm just here to say that there are better opportunity out there than SIA if you have money to put inside let's say Singapore market. And of course, let's look at SATS also. SATS also suffer a similar problem such as SIA. We also have that particular I would say big volume congestion that is happening here, which is a good thing because this represent demand level. This represent all the buyers that are coming in here. So if you are not in SATS during this period and you are only going to enter now, right, then once again you face the same issue as SIA, because we have a minor resistance here. And if it is not able to breach this area, right, most likely it will come down and it will get probably like stuck here for a while, or maybe worse yet, it can even go all the way down back to here. Although that is not a very, very likely scenario that it will go back down to $3 level. Most likely it can get stuck at this range between $4 level to $4.50 level. And that is one of the highly possible scenario. But let's say against all odds, it is able to break through 4.5. Then what you see here is a extremely long consolidation period that has been going on since 2000, end of 2016, all the way until 2020. So this consolidation has been present way before COVID-19 happened, all the way back in 2015. And it is highly unlikely that given how the situation right now, right, SATS can go even beyond this. So much like SIA, if somehow SATS is able to breach through this level, right, it is going to somehow get stuck at maybe 4.8 to 5.24 with the medium price at $5 like that, and it's probably going to stuck there for a very, very long time. And while your fund is stuck inside this level here, right, there will be a lot of other counters that will be going out left and right. For example, just now I give you two examples, but another one that I can think of is iFast. iFast has been in a very, very good uptrend. So instead of thinking whether you should go into SATS or SIA, right, you might want to look at other uptrend counters that are available in Singapore market. Maybe even Franken has been doing exceptionally well. And in fact, Franken, this retracement, you might be better off buying a retracement on Franken rather than say trying to chase this for SATS or even SIA. So if we look at SATS, right, let's say you are able to get to that price of $5. And if we look at the increment, right, it is a mere 15% increment. And it is, I believe, in my opinion, this 15% return on SATS is not worth the risk of opportunity cost or getting your counter stuck, getting your position stuck between these two range here, or worse yet, it fall all the way down here. And this analysis is same for both SIA and SATS. they simply, the current uptrend movement could be a very I would say a technical rebound. It is fueled by news and emotion, but once all these news and emotion dies down, right, the entire market will realize that, hey, like now price is back to pre-COVID level, but the performance of SIA is still not as good as what it was before COVID. And if we cannot somehow improve all this thing, right, the price of SIA can fall back again. Like it is just a current hype that the price is going up. And worse yet, crude oil price is going back up, and it can affect your overall operation. It can increase the total operation cost of all these airline industry also. So in my personal opinion, airline industry is not really a good place to invest. A lot of common defense against SIA that I've heard is that it is too big to fail. It will never go bankrupt. It has government support. Yes, I do agree with that. It will never go bankrupt, but that doesn't mean that the stock price is going to go up. So if you are buying into counter that is never going to bankrupt, right, you are sort of playing not to lose. And in a stock market, right, why would you want to put your money into something that is never playing not to lose? Because you might as well put your money in, I would say, your CPF special account, which might have a better yield, and your capital is maintained. Your capital is maintained while getting 4% return every year, right? Your capital is maintained. But if you go into SIA, hoping that, oh, it's never going to bankrupt, and you are able to get some dividend. In fact, SIA is not even giving out any dividend at the moment. So maybe that's not a fair comparison. But what about SATS? Let's say, okay, maybe the dividend here is not I would say, a trading view doesn't really give an accurate amount of the dividend is paying lah. So but I do know that both SIA and SATS does give out some dividend, and the yield is very good, I would say. But unlike CPF, there's a good chance that you might not get your capital back guaranteed. So if you put in like $10,000, maybe at the end of 5-10 years, you might not get back your $10,000, even though you are getting like 6-7% dividend, because there is a good chance that price might continue to fall or what. So yeah, so you have that. Okay, so that's basically my short analysis for SATS and SET. In fact, I do have a SATS public analysis. It is not a private one. It's a public one. So most of my trade setup, they are private because they are for subscribers only lah. So if you do want to get access to those trade setup, right, you can definitely subscribe to my Patreon. My Patreon link is, you can find it on my trading view. But I do this one, just to reiterate again, I do have a SATS analysis that was a public analysis. Like you can see here that we do have a major resistance and major support. And of course, the price, the current price that it is right now, yes, good that we are going up, but we are very near the major resistance here, and the potential return that we could get from both SIA and SATS is definitely not worth the opportunity cost that you are taking. Okay, so hope this analysis give you a little bit of perspective, especially in a environment where a lot of SIA supporters and a lot of government company supporter. I do hope to give you a little bit of contrarian point of view on why I don't believe these are very, very good counters for trading or even for investment wise. Have a good week, everyone, and stay safe. Thank you very much.